Hi. Corporate reporting. If you find yourself at this stage for corporate reporting, you know that you are Odogo. That is, you are already a big man in the finance world, or you are becoming. Okay? Should I come again slowly? Remember regulators, remember stakeholders, remember shareholders. These are the people we are reporting to. Hi. Corporate reporting. Essentials of corporate reporting is what I want to quickly discuss with you. And the breakdown and what's the subset of the breakdown. I want you to appreciate the course as you are going into it, because majority of the time people fail because they do not know the essential and why what is important to their success in the career. Don't fall victim of that. So when we are talking about corporate reporting, always think about, apart from the financials, which you know, the financial reporting, always think about reporting in form of reporting to stakeholders, among which are shareholders, and also reporting to regulators. Should I come again slowly? Remember regulators, remember stakeholders, remember shareholders. These are the people we are reporting to. And how we are reporting to them actually is a bit different from the financial reporting that we've learned. Establishing it. Don't forget those three. Okay, now corporate reporting can be broken down into some segments apart from this one that you are looking at on the dashboard. There are subsets that are important. Under it, we have the financial statement, which you understand by now very well. The regulatory framework is part of it. Corporate disclosure, management reporting. We talk about audit and assurance. You see how everything is tying up. Ethical reporting. We talk about integration or integrated reporting. We talk about consolidation, that is group financials. Then we talk about technology and communication. These are the subtopics or subsets that made up corporate reporting as a course. Now, they've given us 5 breakdowns and the way in which they are going to mark or categorize the marking, which you are looking at. But I'm just letting you know that it's more than this, and I may do another video most likely that will show us the detail of the breakdown, which I want to believe may not be necessary because it's time consuming, and at the end of the day with this video you can get what you need to understand about the whole syllabus. Financial statement, I'm not going to dwell much on it because you understand it, and it takes just 10% of corporate reporting. Just 10% now. Everything you've understood before, just take 10% now. And under it, we'll be talking about, you are expected to know, rather, because we're not going to be talking about it now. You are expected to understand income statements, balance sheet, which we now call statement of financial position, the cash flow statement, and change in equity. These are the 4 areas of financial statement or components that made up financial statement. Don't forget it. Moving on. Under regulatory framework, we have IFRSs, we have GAAP, and we have the body corporate that regulates. For the regulatory framework, some countries use or are using GAAP, like USA, while over 140 countries are now using IFRS. under which we fall in. UK too fall in. International Financial Reporting Standard has come to stay, while generally accepted accounting standard or principles are still in practice in the United States of America. And you are not going to be examined based on that. You are going to be examined based on IFRSs and IASs and ISAs for audit. Don't forget. And now, driving point on under regulatory framework now, we'll be talking about Security Exchange Commission. Don't forget now, we are looking at the bigger picture when it comes to corporate reporting, not financial reporting. So under framework, which made up of our 10%, those are the things we will be studying or needs to know. Now, let's talk about management reporting. It carries our 20% and it's a component of the 20% mark under reporting of entities, performance, and to stakeholders. Now, when we're talking about management reporting now, we will talk about, or you need to understand CSR, you need to understand how to report on performance, you need to understand how to measure and talk about risk, we need to understand how to forecast outlook and report it and the opportunities that the organization actually is facing. This may be a boardroom level of knowledge, but who says you cannot be the chairman of the board? Who says you cannot be the CFO? Okay, so this course is preparing you for management reporting. This is Gbenga James Olatunji, FCA from GJAMES Associates. We pride ourselves that we are value to life, we are value to your businesses. If you look down the description, because I believe one thing, there's no reason for any accountant to be poor. There's a link. I'm not advertising them, but if you believe you need it, click on it. It will do you a good. Under which social responsibility reporting falls in, which we call CSR reporting. You must understand how to report on financial performance and introduce and examine and report risk factors in the organization to the stakeholders. Don't forget, I spoke about 3 key stakeholders that you must always remember when you are reporting corporately. Can you mention them? Let's put it under the comments. Okay, then forecast the outlook. Some organizations, one notable organization recently could not actually give an outlook because the outlook is not actually looking good. It's part of report and they put it there. They cannot with everything going on in the country, both the macro and the microeconomic indicators suggest that we could not really forecast the future, but nevertheless, we are going to go on with the organization, the running of the organization. Then, corporate reporting too is still preparing you to understand auditing and assurance. And in corporate reporting, you need to talk about your internal control, and also you need to talk about the factor of and the influence of the external control in the reports you are giving out or presenting. So your understanding of audit and assurance will be tested, in which you need to be strong in internal control. Don't forget, I've done internal control series. Everything you need to know about internal control, and you can check it up. Most likely, if I remember, I'll put it in the comment. If I do not remember, go to the playlist and you will find series on internal control. I did it recently. Okay, then You need also to be able to report your external auditors' influence, their factors, their risk factor they observe, and the like. You must be able to put it together in your corporate report and understand its influence on your report. Also, on the ethical side, and your knowledge of auditing and assurance is 20% of your syllabus, even though it is not stated directly, but it is there. By the time we go into the details, which you can check, because I don't want to go into that detail, I believe it is not necessary for this timing. Okay, if you believe you need to, please check the syllabus on the website. Having said that, then the integrated reporting. You must have a knowledge and understanding of integrated reporting. And when we are talking about integrated reporting, we are talking about you understanding the influence that code of conduct has over you and the financial and non-financial reporting. Those are the integrated reporting measures that you need to understand. In the corporate reports, we have the financials and we have the non-financial. Basically, the corporate report is made up of these two, whichever way we look at it. We have the financial, and you must be strong at reporting on the financial. And we have the non-financial, which we call the narrative. The narrative must support your figurative as a sound accountant reporting corporately. Last but not the least, and this carries 20% weight of your syllabus, and it is on consolidation. Your knowledge of consolidation is consolidated in this topic or in this subject called corporate reporting. So group accounts, you must be very, very good and sound. And it's easy peasy. If you will look at it, really, you only just need to know the principle that governs how to know and dissect the minority interest. If you are able to understand that very well, group account becomes very easy. And I know it's going to be easy for you with help of GJAMES Associates. Don't forget to like, share, subscribe. If at all this video has been beneficial to you in any littlest of way, subscribe, like, click the button, and the subscription, click all so that you will not miss the next episode that we will be bringing in. Last but not the least, as we move on, is also there's a side of technology and communication that is embedded in your syllabus called corporate reporting. So it is interwoven, and don't forget, if you be sincere with yourself about the future of accountancy, you know that the knowledge of technology and communication is very important. This is what is called under the corporate reporting beyond financial reporting, current development, in and beyond financial reporting. So you find a lot of all those in there. In summary, corporate reporting take a step ahead of financial reporting. This is the bottom line. And when you are reporting corporately, always ensure at the back of your mind is the stakeholders, the shareholders, and the stakeholders, the shareholders, and the regulator. Those are the people you are reporting to. Always have them at the back of your mind. Also, only the corporate entity is reporting. That is, As you are reporting, know that you are reporting on behalf of an entity. You are speaking on behalf of an entity, which we call corporate entity. And that corporation is expected to report in a certain way. And that leads us to the regulatory framework under which we have IFRS, which we call International Financial Reporting Standards. There are a lot of them in the syllabus which you need to understand. I hope time will permit me to be able to make videos on that. So always check on GJAMES Associates channel. Also, we have GAP, which basically US is still using, and we have local regulators which regulates the industry your corporation is into, or if your organization is listed, the Security and Exchange Commission will be one of your go-to regulator, and their frameworks must be abided by. Then you must report corporately and be mindful of corporate disclosures. And I think I now, when I'm doing the video, I did not even remember to say this. And now we are wrapping up. You have it as a bonus. Corporate disclosure, under it, you have those that are mandatory. You have those that are not mandatory. We call it voluntary disclosures. Whether mandatory, whether voluntary, you as a student of accountancy need to understand it. All those are in the syllabus. This is not syllabus review. This is talking about essential of corporate reporting. I'm giving you a snapshot as a guide for you to understand the subject and why you need to be rigorous in knowing it. That is the essence of the video. Okay. Then your knowledge of auditing is important because you need to be strategic in your reporting of internal controls and the influence and the risk factors that the external auditors have identified. Ethics will affect your corporate reporting and is part of what you need to understand and digest in corporate reporting knowledge, which talks about your ethical standard. When I say your now, don't take it personal. I mean your understanding of the ethical standard of accountancy and the code of conduct for professional accountants. Then you need to understand the integrated reporting, which maybe, which are not maybe, which are financial and non-financial in nature. Your narrative reporting must support the financial reporting, and your financial reporting must be the backbone of your narrative reporting. Those must go together to have a good corporate reporting. Your knowledge of consolidation, that is group accounts, is very important. Your knowledge of influence of technology and communication in this world of finance and accounting is very important. This is Gbenga James Olatunji, FCA from GJAMES Associates. We pride ourselves that we are value to life, we are value to your businesses. If you look down the description, because I believe one thing, there's no reason for any accountant to be poor. There's a link. I'm not advertising them, but if you believe you need it, click on it. It will do you a good. Don't forget to subscribe to GJAMES Associates. We are value to life. We are value to your businesses.